So Tesla has a demand problem. Must be the best joke of the year. Hey everyone, Couch Investor back to another video for today. So in today's video, we're going to talk about that Tesla demand problem. We're going to have a look at the graph at the end of this video. I'm going to talk about some battery production with regards to the Tesla Semi that TSLA has tweeted out on Twitter. All of that in this video. Would appreciate it if you liked and subscribed if you have not to this channel. And if you want to support me as well, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Make sure to check out all the other links in the pinned comment as well, some of which might actually save you some money. So, topic number one, Tesla Semi. Elon said that the first semis will be delivered to Pepsi. Pepsi confirmed that as well. But what about the batteries for the Tesla Semi? Because remember, the Tesla Semis were actually never going to happen because, well, science and technology, Tesla couldn't handle it.
Yes, science! Okay.
So, the batteries. So TSLA, he says, assuming it uses exactly 2 kilowatt per mile for 500 miles, it would have a battery capacity of 1000 kilowatt, which would require 10,205 Tesla 4680 cells or 5,102 cells for the 500 kilowatt battery. He said that after tweeting this, production of the Tesla Semi could kick battery cell production into overdrive. They continue by saying on their own website that this enormous amount of cells could be used on 12 Tesla Model Y batteries. So if they want to ramp up Tesla Semi's production, obviously the battery production should be ramping up as well pretty fast. That's definitely something we should keep an eye on, and definitely something that should be mentioned during the earnings call. Maybe we'll see something with regards to the energy side of the business in the earnings report. I'm sure we're all going to follow Tesla's daily live stream. Now, with regards to Tesla's demand, I'm sure you've seen the videos, I'm sure you've seen the articles and the tweets about, oh, Tesla's demand is crumbling. So, let's have a quick look at what exactly has been happening with Tesla's slow in demand. Exhibit number 1. Tesla Model Y became Italy's best-selling EV in September. Interesting. Tesla Model Y beats, guess what? The Fiat 500e by, well, more than double. And guess what? The Fiat 500e is much cheaper than a Tesla Model Y. So, yeah, Teslas are expensive. Of course, they have pricing power. And if you follow the news, you know that Ford has also hiked their prices for the F-150 Lightning because, well, they have to. You know, one thing that Tesla has that a lot of automakers, maybe even most automakers, do not have: record margin. You know what that means? Well, that means that Tesla could lower their prices if they want to. Yes, that will obviously hurt their margin, but at industry leading ones, okay, you take a little hit, you will still be the leader in that. So, hey, that's a luxury position for Tesla. Let's have a look at exhibit number 2, shall we? Model Y is best-selling overall car year-to-date in Switzerland. And guess who's number 3? Model 3. What would you know? Incredible slow in demand for Tesla vehicles. I mean, it's actually incredible. It truly is incredible to see Tesla beat out, well, most of the competitors each and every time, and even when they are raising prices, right? Of course, the current market environment might prevent future buyers from buying a Tesla. But right now, slowing demand, well, I don't think so. Plus, in the United States, of course, a lot of people might be waiting for that $7,500 credit that we'll get after January 1st, of course. But again, a small headwind right now, big tailwind for 2023. Plus, 2023, Tesla Semi's production, supposedly Cybertruck as well, ramping up of Berlin and Austin. I mean, of course, slow down, right? Because, what else will get clicks? Now, exhibit number 3. Tesla Model Y beats Ford and Toyota bestsellers in New Zealand. Interesting there. 1,502 Tesla Model Ys were registered compared with 1,043 Ford Rangers and 989 Toyota Hilux. And of course, this makes sense looking at the global picture. As Berlin ramps production, Shanghai has more vehicles to export down under. Down under means Australia and New Zealand. Makes total sense. And of course, we shall not forget that Tesla is losing market share because when the competition is coming, there are more and more players out there. So yes, some people might say, ooh, that headline says Tesla went from, I'm just making up numbers now, from 20% market share down to 16% market share. Oh, demand is slowing down. No, the market is just becoming bigger and Tesla's share in that market actually is also bigger. I mean, 16% of, let's say, 100,000 vehicles is bigger than 20% of 50,000 vehicles. Won't you agree? But of course, jokes aside and everything, yes, there's lots of companies that are coming out with great EV cars out there. But again, not a lot of companies have such a high margin as Tesla. If we are going to go through months, maybe even a year of slow in demand because of macro and high inflation, etc., people don't want to spend that much money on EVs, then, well, Tesla is in a pretty good financial situation. Other car makers, not so much. So while there might be a short-term, let's say, headwind for Tesla, there's going to be a huge, huge headwind for everybody else as well. And if your company is healthy financially, you're going to come out of that situation much stronger and much bigger as well. Because, well, Tesla, like I said, high margin, you have the luxury to reduce the price, while your competitors do not. It's basic math. I'm not a math genius, but this I know. So there is that. And a couple of things extra before we go into the graph. Remember when everybody said right now, well, not everybody, but a lot of people are saying, oh, Tesla stock is going to $100, Tesla stock is going to $120. I don't know, some specific numbers. I don't know why. But for no reason other than, well, they saw some headlines and yeah, the market and it's super expensive, it's overvalued, it's overhyped, etc. Disregarding the fact that the company is still growing 50%, right? Disregarding the fact that they still have the highest margin in the industry. They just say, oh, everything is down, so Tesla has to go down as well. So let's have a look at this tweet right here from Tesla Economist. People saying the stock will drop $120 is the equivalent of $376 billion market cap. He speculates Q4 earnings will be approximately $6.5 billion or $26 billion annualized. If you divide those two numbers, you get 14.6 annualized PE for Tesla. Okay, weird smiley face. He also adds here that we have two new factories, which are obviously Berlin and Austin. When that will ramp, that would double current production and increase earnings by 2 to 3 times. Plus, remember, Tesla will announce a new factory by the end of the year. Now, of course, the new factory will take, let's say, 1 to 2 years' time to build, then another 1 to 2 years' time to ramp up completely. So you have to take that into consideration as well. But would they build another factory because they see that demand is slowing down? Or would they build another factory because, well, they need more production to happen? Interesting. So last thing before we conclude this video is the graph. Now remember the video about the red flag for Tesla, which obviously was the Twitter lawsuit. Some people didn't agree with me and that's fine. But the reality is a lot of hedge funds and people with a lot of money are waiting on the sidelines to see, will Elon sell more or not? It is a headwind whether you like to believe this or not. Now, doesn't matter. I also said in the video that disregard Twitter stuff, just look at the MACD. The MACD didn't look great for Tesla. It was bearish. And I said that only a market reversal would fix that. Clearly, that did not happen. We keep going down and down. Now we are entering this territory here where in the past, in May, in June, and in July, we have rebounded from these areas here between, what was it, 200 and the price we are today. So let's see if that might hold as well. We are still having that Twitter, let's say, overhead, it is something to keep an eye on. Earnings are fast approaching. I'm sure they will be quite good, but let's see how the market reacts. So that will be it for this video. Obviously, do share your thoughts down in the comments below. Are you convinced that demand is slowing down, or are you willing to pick up some share if it becomes even cheaper? What are your thoughts on the upcoming earnings? Let me know down in the comments below. Check out all the links out there as well if you want to support me. Like and subscribe if you have not yet. And I'll see you all in the next one. Bye bye.